Hello, everybody. Thank you very much for joining our webinar today. We're doing something a little bit differently than we normally do here for BizEquity. We're actually going to have one of our favorite users based out in Illinois present for us. They have kind of an interesting business idea that's sort of how they're going to implement BizEquity into their practice in 2019, and how some of those ideas may carry over and help you users. And they're also looking to potentially partner up with some of our other users around the country. So we do have Frank Lunn, the CEO of Kahuna, on the line with us. He's going to basically go through and host the rest of the webinar. But if you do have any questions throughout the process, just type it in the question box. At the end, I will answer any of the questions we can. Any questions direct for Frank, we'll take care of it. And again, we're looking forward to having them present. It's a pretty cool idea, and it's pretty unique to how most of our users use our system. So we definitely wanted everybody to hear their approach and their process. And sort of without further ado, I'm going to go ahead and pass this over to Frank. And again, any questions along the way, feel free to just type them in that box, and we'll get them answered at the end. All right, take it away, Frank.
Wrong one here. Sorry. Hi, I'm Frank, and while Andy is helping me with the technical piece, I just want to share a little bit of our journey with BizEquity and where everything really came into be, and how we are learning, living, and sharing the journey of entrepreneurship. And we're excited to be able to work with other BizEquity professionals in different areas and really just learn together and move forward with a lot of things. This is such an exciting area because everything is really new. 5 years ago, none of this really existed in a way that would make sense for entrepreneurs. So we're excited to be able to share a little bit different take from an entrepreneurial perspective and be able to look at that in a way that really adds some value in not only for us as advisors, but also primarily for the entrepreneurs that we're privileged to work with. So one of the things that I have learned really the hard way is regarding business valuation. What you don't know really might cost you a fortune. What you don't know as an entrepreneur about sales or marketing or operations or HR, hiring, any of those things, they're really important. But what you don't know about business valuation could really cost you not only a fortune, but your fortune. And for the entrepreneurs that we work with, it's their fortune. And again, some of this really came home to me in a way that really should heed this warning that ignorance is expensive. Now, ignorance really is the starting place for all knowledge. And so starting out ignorant is not an issue, but remaining ignorant certainly can be. And so one of the things that we found, and I'll share my story, is that not knowing what we did not know about business valuation really cost millions and millions of dollars. Now, I'll share something with everybody here, and it's a little bit painful. And in truth, I'm probably exaggerating a little bit, but exaggerating in the other direction than you might think. Just because if I really got technical and figured out how much I actually lost, it would probably make me cry a little bit more than I had. But valuation, again, is not important to most entrepreneurs really until it's critically important, and which by then is unfortunately too late. So my entrepreneurial journey, I started this business that I'm currently in 1995. We moved into the ATM sector in 1997, and we started building this business. And I was kidding with our lawyer and said, if this ATM thing works out, it could be the big Kahuna. And that's where our Kahuna name came from, Kahuna Business Group. So we started working through this. I never ever once thought about exit. I thought I'm building this for my future, for generations. And what happened was in 2011, our biggest client at the time we had about $25 million in revenue, and we had one client that made up a very, very significant part of our business, certainly more than 10%. And they decided that they wanted to sell. And as troubling as that was, as it became more clear, we were going to be forced to sell as well. And so at the time that we were forced to sell our business, it was really too late to make any changes. And we had just invested at least $1 million in some technology that once it was all said and done, and the acquirer that ended up acquiring the group, they threw it all away. So even just looking at a simple thing like $1 million at a 4x multiple, well, that's $4 million that we left on the table. And again, I'm sharing a little bit here. It's painful, but it's probably exaggeration in the other direction, because there are a number of things that I could look at, and my partners and I have discussed, that knowing what we know now, if we could have gone back 2 or 3 years, we would have done so many things so different. And so I guess our message right now is that with technologies, companies like BizEquity, they just didn't exist in the past. And from an entrepreneur's perspective, it really didn't make sense to, in the old paradigm, to really get excited about a business valuation, because it was expensive, it was time consuming, it was cumbersome, and really what you were looking for at the time was a snapshot. And so again, as a growth entrepreneur, we built a business from scratch really to $25 million in revenue, and we're really excited about that. Thinking about getting a business valuation and going through that was like volunteering for a root canal or an IRS audit. Not exciting at all. But again, after all of this has transpired, realizing so much has changed in technology, with open APIs, with data, with a lot of the technology that just didn't exist even in the cloud. So all of these things have changed, and it really helps entrepreneurs understand themselves. And that really is, to borrow from Sun Tzu, knowing yourself is really the most important thing. So valuation, again, for most entrepreneurs, it's not something that they think about, because in the past, it really hasn't been that well or that good of an option. And so there's no wonder that only 2% primarily really have a good idea of what their business is worth. So again, valuation is not important until it's critically important, which by then, unfortunately, is too late. So let me go back and let me be frank with you, and that's a little bit of a play on words because people sometimes don't remember my name. So, but to be frank with you, to be candid, I want to start off and explain I'm not a CPA, I'm not a CVA. I actually have no letters after my name. Now I looked at Scott Gabehart, and he's got 18 letters after his name. That guy is a technical expert. If you took all of my various series certifications and added them up, it'd be 0. So I'm not a technical expert as far as valuation, but I would say I am an expert in entrepreneurship and in the journey of entrepreneurship. Because of where I've come from and what I'm doing, I understand that valuation plays a key part of business planning. It really plays a key part in where entrepreneurs are going. So yes, we need to look at how we can grow revenue, how we can drive profit, how we can, build cash flow. But ultimately, as an entrepreneur, our worth, the value of our business is the foundation for our future wealth. So as an entrepreneur whisperer, I want to share something with all of you, because again, most entrepreneurs in the privately owned companies, and I would put that in the range of $1 million to 10 million on the way to 100 million. There's so much information that's out there that's wrong. There's a lack of real true information, but more importantly, there's a lack of true understanding of what drives an entrepreneur like me. And I'm just one archetype. There's different, you've got everything on the scale from an operator, a proprietor, to a side hustle business, to a self-employed, to a business that's looking to build something and flip it, to a business that is looking to build something for generations. And each one of them have different things. But the one thing that we have found more than anything is understanding what your business valuation, that is a no-brainer. It's something that every single business that we work with absolutely 100% without a doubt should do. And there's really no excuse right now other than remaining ignorant. And I say that because most entrepreneurs don't really understand that. Now, again, technical valuation expertise is important, but it's not really as important as everything else is as far as coming to understanding what an entrepreneur really really understands. So, you know, if you had to do, or if I had to do some kind of a presentation about discounted cash flow and how it affects EBITDA related to recast earnings, or adding back minority shareholder buyout with a different unrelated party, or something related to the real estate that was done and it was in the second quarter of when Jupiter aligned with Mars, or something crazy like that, I tell you, I would call Scott Gabehart, or I would call the experts at BizEquity or somebody else. I don't need to be an expert in that because we have experts in that. But what I need to be an expert in, and what we all need to be an expert in, is understanding the fear, the uncertainty, the doubt, the worry, the anxiety that an entrepreneur has. And they have no idea what the value of their business is. And so again, for most of them to be able to say, hey, I think I want to spend anywhere from $8,000 to $15,000, you know, in the old methodology, and I want to be able to get a snapshot of what my business is worth, and I'm going to pay all this money. I'm going to take my focus off of driving revenue, driving growth, driving profitability, because I want to just get this feeling of what my business is worth. It's just not going to happen. It hasn't done that in the past. So it's up to us to be able to help an entrepreneur understand that there's so much more. And if they have their business planning and they can tie in the current valuation, what's possible with where their valuation could be, and what steps are needed to take to get that, well, that makes a huge, huge difference. So in the past, a valuation was a static, it was a snapshot. It was like taking your balance sheet one time and holding on to it until something was needed in the future. Well, things change, a lot of things change. And so with a name like Kahuna, we use the SURF strategy, which is survey and understand a situation, so that you can then take that information and make a plan to respond and focus. So we look at surfing as a metaphor. It's dynamic. Everything is dynamic in being able to take advantage of situations as they are changing, as you are creating change. So as we go forward with this, you know, we've started to make a little bit of a pivot. So after we sold our ATM business, we switched to be able to focus on entrepreneur support. So we sold our core business, the ATM business, 2/3 of it in 2012, and we got a second bite of the apple and got completely out of that industry in 2014. But we kept our core expertise and our core business related to supporting small entrepreneurs. And we really started to build and look at accounting and other systems to help an entrepreneur navigate from where they are now to where they want to be. So we look at that and we call it dynamic guidance. And it's really no different than your GPS. It's where are you now? Where do you want to go? What are some routes? And as you're on the way, how do you look to get there? And so we've embedded a lot of different technology and working through some things. And I want to be very clear, we do not have this all figured out. We're learning, living, and sharing. But there's a lot of opportunity in this space when it comes to data, when it comes to valuation, when it comes to accounting, when it comes to helping an entrepreneur understand where they are in relation to where they want to be. There is a tremendous amount of opportunity that also creates some areas of challenges, because we have to educate the consumer, which is our entrepreneur client, and we have to educate them in things that are a little bit ahead of their time. And so that's part of one of the things that we're excited about working with BizEquity. They have been phenomenal to help us in some of this. We've been trying to pioneer some of this and working together with not only BizEquity, but a lot of the partners at BizEquity, where we're on aligned missions to be able to help the entrepreneur. And so this is just a quick slide to show some of the tools that we're using. One is a dynamic dashboard where we tie into their financials, and whether we do their accounting or whether we just help them make sense and get clarity of their accounting, that's one piece. But then also tying into their valuation and helping a business look at where their valuation is currently, but then more importantly, helping them to see what's possible with valuation, and helping them to even understand what their goals are. Most entrepreneurs do not have clear goals of what they want the value of their business to be, nor do they really understand what's possible when it comes to the geography, the NAICS code, the size of their business, the makeup of their business, the clients that they work with. There's a lot there that they just don't think about, and so that's our job to help them think about. And then once we do, to help them with a plan to be able to go from where they are now to where they want to be. So that's really kind of the place where we find ourselves. We work with entrepreneurs and we help them with dynamic guidance. We work in accounting, but we also utilize business valuation as an education tool. And we're working with other advisors. Again, we do accounting, but we also work with, because of cloud and other things and integrations, we work with a lot of people to help take that data and turn it into something that's more than just one-dimensional. So a pilot who is flying has more than just one instrument. And yet a lot of times business owners only use a very few amount of the instruments that are available to them. One of the things that we actually started doing with our clients, and this actually started with us, is asking the kind of the crazy question, what would it mean to you? What would it be worth to you if you could raise the value of your business by over $1 million in the next 2 years? And I asked that again. So what would it be worth to you if you could take and understand exactly what your current valuation is now and improve it by over $1 million in the next 8 quarters? And we started asking some of our clients that, and it kind of gave birth to a little bit of a challenge. We actually signed up for it first, but we're looking at 100 entrepreneurs that we wanted to be able to ask that question, and have 100 entrepreneurs over the next 2 years to be able to raise their business valuation by at least $1 million, if not more. So 100 entrepreneurs to be able to go $100 million improvement in valuation. Now, we've been sharing all of our information and our plans with BizEquity, and we're really excited about this. Again, it's a skunk works. It doesn't, it's one of those things that we want to be able to find different opportunities to learn, because we know success leaves clues. We know that in the place where we've come from and the place where we're going, as far as business valuation and tying it into business strategy and tying it into the net worth and the wealth of an entrepreneur, there's so much we don't know yet. And so we're excited for a rising tide lifts all surfboards. And that's one of the most exciting things that we found out ever since I first read the book, What is Your Business Worth? And I had a chance to meet Michael Carter, and I got a chance to meet Scott Gapehart and a lot of the leadership team there. We have been so fortunate to find BizEquity at the time that we have, to be able to work together. And even in all of the different advisors that I have met so far, there's not been one that has not impressed me with having an aligned mission. So we may all have different focus areas for our core business, whether it's insurance related or wealth related or entrepreneur services, but all of us are on this journey together, and a rising tide lifts all surfboards. And so we just want to be able to share what we're learning as we learn it. Success leaves clues. We want to be able to help other advisors as we're working through helping and serving the entrepreneurs that we're so fortunate to work with. And so again, I want to be very, very clear. We do not have this figured out, but we love to collaborate. We love to partner. And we're, again, very appreciative for everything that BizEquity has done for us and with us as we go through some of these little challenges and tests that we're experimenting with to be able to better serve the entrepreneur clients that we're blessed to serve. So with that, I just want to say thank you to BizEquity, and thank you to all of the advisors who are out there, because again, we're a little bit bleeding edge. When there's only 2% of the entrepreneurs that have a true understanding of their business valuation, that means that both, one, there is a tremendous, tremendous, tremendous opportunity for us, but it also means that we're still far enough ahead of the curve that we really have to work to educate and to be able to add value to these entrepreneurs, because it's not top of the mind. It's not as sexy as, hey, I can double your revenue. It's nothing about business valuation is immediate, but at the same time, just like the old adage about when's the best time to plant a tree, and the first answer would be, multiple years, 10, 20 years ago, and the second best time is right now. I think it's got to be the same for us when it comes to what's the best time to start thinking about your valuation for your business. Well, it certainly would have been, 3, 4, 5, 10 years ago. But the other best time for an entrepreneur is right now. And so that's our opportunity. So with that, I just want to again say thank you. We're very open architecture. If there's anything that we can do for entrepreneurs or those who are serving entrepreneurs so that we can improve our serve together, I just want to say we are more than welcome and more than excited for that opportunity. So Brian, I just thank you so much for this chance to share and open it up for anything on your side.
Right. Well, thank you very much for that, Frank. That was awesome going through your kind of story and the idea moving forward. And just to reiterate, the reason we wanted to do this webinar and the reason we're happy that that Frank and Kahuna sort of wanted to share their ideas is it's just kind of a little bit of a different approach to using BizEquity. And we wanted to kind of, maybe that'll spark ideas from some of the other users on the call today. And anything moving forward, feel free to reach out to me. If you do want to connect with Frank, I'm happy to connect you. And if there are any questions, go ahead and throw them in that chat box. Otherwise, this will be sent out as a recording tomorrow, and we will also add it to the Success Center. So, we do want to give a big thank you to Frank and the team at Kahuna for, sharing their idea and helping give our users other ways of how they can be successful using our platform. So it looks like we didn't have any questions. So we'll end the webinar now, but look forward to working with everybody and hope everybody has a good holiday week this week. All right. Thank you very much, Frank, and thanks everybody for attending.